I think probably the tariffs are bigger than GM thought, much more aggressive than GM thought. So they've withdrawn the guidance, and they had a $6 billion share buyback.
Assembly lines across North America are grinding to a halt, and nearly 50,000 jobs are at risk. General Motors is suspending production in key plants as rising tariffs disrupt supply chains, inflate costs, and stall electric vehicle rollouts. What was promised as a boost to American industry is now triggering layoffs, factory shutdowns, and growing uncertainty across the auto sector. The road ahead for GM and its workers has never looked more uncertain. In April 2025, the U.S. government placed a 25% tariff on all imported cars and auto parts. The goal was clear: bring back factory jobs and boost American-made vehicles. But inside General Motors, alarms went off. CEO Mary Barra warned that these new tariffs could wipe out up to $5 billion from GM's earnings this year alone.
General Motors, just one of a long list of companies sounding that alarm. GM saying that the tariffs could shave up to $5 billion from the company's total profits this year.
Why? Because most GM vehicles, even those built in the U.S., still rely on about 40% imported parts. That includes everything from electronics to steering components. A simple steering knuckle that cost $28 now costs $36. Multiply that by thousands of parts, and the cost to build a single truck like the Silverado has jumped by over $3,000. GM initially tried to absorb these extra costs to avoid raising prices, but Wall Street wasn't patient. Investors pushed back, and by May, GM was forced to increase prices mid-year. Meanwhile, suppliers were hit even harder. Some companies couldn't keep up with rising costs and had to shut down or cut jobs. Plants that were once busy are now seeing delays, slower production, and in some cases, full stoppages. And the promised jobs? They're not coming back. Instead, the tariff plan has created a ripple effect of rising costs, shrinking margins, and growing uncertainty for American workers and automakers alike. But the real damage wasn't just in the numbers, it was in what started happening inside the factories themselves. The effects of the tariffs didn't take long to reach the factory floor. On April 11th, GM's Factory Zero in Detroit paused production without warning. Officially, it was due to slowing demand, but inside the plant, workers pointed to rising costs and missing parts. Over 200 employees were sent home. Then came the Ingersoll Cami plant in Canada, which shut down its Bright Drop electric van line until October, laying off 1,200 workers on May 2nd. Soon after, GM's Oshawa plant cut its overnight shift, eliminating another 700 jobs. Across Indiana and Tennessee, key suppliers like Adient shut down entire facilities, slashing 400 more union jobs. The dominoes kept falling. Parking lots, once full of shipping trailers, are now sitting empty. Ads for new factory jobs disappeared almost overnight. GM called it elastic idling, temporary halts in production to wait for parts and stabilize costs. But for local businesses and workers, there's nothing temporary about it. Michigan diners reported losing 40% of their customers in just 1 week. An Indiana hardware store said it might lose half its staff if things don't turn around. And while Wall Street cut GM's 2025 outlook by 18%, workers are left waiting, watching paychecks shrink and toolboxes gather dust. And it's not just gas-powered cars taking the hit. Electric vehicles, once seen as GM's future, are now facing their own crisis. Just a year ago, GM was leading the electric vehicle revolution. The plan was bold: sell 100,000 Ultium-based EV trucks annually and push toward a fully electric lineup. But in 2025, 3 major blows changed everything. First, the federal EV tax credit, worth $7,500, was repealed in March. Then, Congress froze funding for public charging stations. Finally, new tariffs hit imported battery minerals, driving Ultium production costs even higher. The result? Factory Zero, once GM's EV pride, is now packed with unsold Silverado EVs covered in dust. Internal reports show EV buyer interest has dropped from 14% to just 7% after incentives vanished. Even 0% financing deals can outweigh rising electricity and insurance costs. GM CFO Paul Jacobson admitted in a May earnings call that the company now expects to sell only 65,000 Ultium trucks this year, well short of break-even. Each unsold EV ties up $45,000 in inventory. And worse, heat damage is beginning to degrade battery packs sitting idle in open-air lots. Consumers are frustrated, charging stations are unreliable, and some buyers are returning to gas vehicles. GM isn't just pausing production, it's rethinking whether its electric future is even possible under current conditions. But as EV dreams dim, tensions are heating up inside union halls and on factory floors. Tariffs were meant to unite American labor behind a common cause, protecting jobs. But on the ground, they're splitting workers apart. In Detroit, UAW President Shawn Fain stood by the policy, calling it a necessary move to put American jobs first. But in Canada, Unifor leaders accuse GM of sacrificing Canadian jobs for political gain in the USA's layoffs mount. So does resentment between plants. Even within the same factory, workers are divided. Some who once supported tariffs now question if it was worth it. With overtime gone and wages dropping under sub-pay coverage, families are struggling to keep up with mortgage bills. Toolboxes stay packed at home, just in case another shutdown hits. And for many, it's starting to feel like a repeat of Lordstown's 2019 closure. Meanwhile, the political response offers little comfort. Trump dismissed GM's losses by saying they made their choices. No support package, no policy rollback, just pressure to adapt. As unions scramble to protect their members, workers are left wondering who these tariffs were really meant to help. And while tensions rise on the factory floor, the global auto industry is beginning to feel the shockwaves. The effects of U.S. auto tariffs are spreading far beyond GM. In Canada, Stellantis' Windsor plant, the country's last minivan plant, cut operations sharply, triggering 900 layoffs tied to its U.S. supply chain. Dealer lots are piling up with unsold Pacificas, yet prices continue rising due to more expensive Chinese parts. Volvo North America announced temporary layoffs for 1,000 workers in Pennsylvania and Virginia, after truck prices jumped from $165,000 to $180,000. GM Korea, which exports nearly 90% of its output to the U.S., now risks collapse. Some analysts are comparing the situation to GM's 2017 exit from Australia. Hyundai and Kia are shifting production to Alabama and Georgia, but those plants won't open until 2027. Even stable supply chains are now fragile. A piston from Mexico might cross the U.S. border 3 times, each crossing adding cost and delay. One Ontario supplier lost $1.2 million in a week over a customs glitch. As global pressure builds, GM must now answer a critical question. Can production truly restart, or are deeper cuts still ahead? At GM's headquarters, leaders are weighing 3 possible futures. The best case: by late June, Brazilian wiring and Mexican engines return, and production resumes in Fort Wayne, Oshawa, and Factory Zero. GM hits its scaled-back target of 65,000 Ultium trucks, and margins, while tight, stay positive. The second path is murkier. New tariffs on electronics from Japan and Korea spike costs, slowing down production again. With Congress stalled and no relief in sight, credit warnings mount and investor trust erodes further. The worst case? China cuts off rare earth exports. Without them, Ultium battery production halts. Vehicles remain unfinished. Plants in the U.S. and Canada shut indefinitely. Debt outlook turns negative and worker morale collapses. Now, GM's future hinges on three fragile levers: policy, consumer demand, and supply chain recovery. And the longer the lines stay quiet, the harder it gets to bring them back to life. What was meant to revive American manufacturing is now putting tens of thousands of jobs at risk. GM's future and the future of its workers hangs in the balance. Subscribe for in-depth updates, and don't forget to like, share, and join the conversation below.